What's going on, everybody? It's Stas here. So the stock market bounced back today, guys. S&P 500 up 40 points, up 1.2%. The Dow Jones ended up going up 140 points, up 0.5%. And the NASDAQ 100 ended up going up 207 points, up over 1.8% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks that I'm looking to buy right now. And I also want to break down big tech earnings. We had Apple, Amazon, Facebook, Google all report today. And I also want to share with you guys what I've been up to in the market and kind of where my head is at right now as a trader and as an investor. So if you guys find value, hit the like button, make sure to subscribe to the channel, and check out all the free links down below and get your 3 free stocks from WeBull as that is expiring here on the 30th of October. So deposit $100 and you get 3 free stocks from WeBull using that link down below. So guys, let's get into it. Again, nice bounce back day in the market today. S&P ended up going up 40 points, and taking a look here at the intraday chart, it was, well, it looks like now that I'm looking at it, a reverse head and shoulder pretty much from yesterday heading into today. You guys can see it. We have the left shoulder here. We made the head at about 32.50. We ended up completing the right shoulder today, earlier in the day actually, and we ended up rallying up to fully complete that right shoulder in the reverse head and shoulder here. And then we got rejected at a very critical spot, guys. Take a look at where we got rejected. This is honestly, although the Bulls did well today, they won the day, obviously. The rejection that happened in the last couple of hours in the market here, it's a bit worrisome, I'd say, for the Bulls. So let's take a look at that. If we take a look here on, let's say, the 30-day chart, you guys can see we got rejected at 33.30, and this is a level that I talked about yesterday and in a couple other videos as well. 33.30 on the S&P was a support back in the end of September heading into October. We double bottomed there, and we ended up rallying all the way up to 35.50 into the middle of October, followed by this big sell-off that we're still in, right? So the fact that we failed breaking out of 33.30, that is not a good sign for the Bulls. And if we take a look here on the hourly chart, you guys can see it even better if I zoom in. We literally hit 33.30. We rallied out of it a bit to about 33.40, but we failed holding it. And we actually saw a pretty big rejection there across about an hour and a half, 2 hours, right? So S&P closing on that downswing is not too good for the Bulls. So for tomorrow on the index here, I'm looking at 33.30 as a big resistance. And when it comes down to SPY, which is an ETF that tracks the S&P, you guys can see it here on the hourly chart. We got rejected by that 50 SMA at a lower high and under that 333 level of resistance, which was a support back on the 6th of October. So the fact that we failed breaking out of there, we hit the lower high, we sold off aggressively in the last 30 minutes, hour of the session today, that is leading me to believe, and after hours here as well, you guys can see the sell-off is continuing. That's leading me to believe that the bears are gaining charge, and they still have a slight edge in the markets right now. And I mean, take a look, 330 on SPY, which equates to about 3,300 here on S&P, roughly, right? That's also breaking after hours on SPY, so that is a bit worrisome as well. So for tomorrow, I'd see, okay, is SPY going to test that low from today, 325? If so, bears are likely to continue to go down, and especially if big tech, the stocks, end up going down tomorrow. I mean, they have a huge weighting on this market. That's going to send the market's down even further. So at this point, bears, although the Bulls won the day, the bears are gaining an edge here after hours, and honestly, the past hour or the last hour, 2 hours in the market. And if we take a look here at the Dow Jones, you guys can see a very similar scenario playing out. On the 20-day 1 hour chart, ended up getting rejected at about 27,000 points here on the Dow at a lower high, and we closed on that downswing. And if we zoom out a bit, 27,000 is a pretty big level of resistance, guys, right? It was a resistance back in the month of July. We actually held roughly around 27K, and we rallied out of it towards the end of September. So the fact that we're failing under 27K, going back down to 26,500, that mid 26,000 level, that is not good for the bulls, right? The bulls need to break out of 27K here on the Dow to gain some momentum, to gain full charge, quite honestly, guys. And that's kind of what I'm seeing here. And at any time, feel free to drop a comment. Let me know your thoughts down below. And if you all are enjoying the video, make sure to smash that like button while you're at it and subscribe to the channel. So that's what I'm looking at here for the Dow Jones. And when it comes down to the NASDAQ 100, which ended up going up today in anticipation of big tech earnings, right? Facebook, Amazon, Apple, and Google. It ended up closing under a big resistance as well, right around 11,500. And it's no secret. I mean, you guys can see it here. I've been talking about it for weeks on the channel. 11,500 is a big resistance. Stemming back from the beginning of September, we got rejected there once, twice, into the middle of September. And at the end of September, beginning of October, before the rally up to about 12,200, we were getting rejected at 11,500 until we obviously broke out of it. So at this point, as long as we're under 11,500 on the NASDAQ 100, and on this hourly chart, we're under the 50 SMA and the 180 SMA, the NASDAQ is still being handled by the bears, right? It's still not fully breaking out. I mean, it's very clear based on this hourly chart. So the moral of the story is markets in the short term, they're still downtrending, and today's rally very well could be a bull trap, guys. It very well could be. And the after-hours action in SPY and the way that the market's closed, it looks like it wants to push to test those lows from earlier in the day, which would obviously mean the continuation of the downtrend. So let me know your thoughts down below in the comments. What are your thoughts on the markets, everything going on right now? Are we going lower here before the election? Are we going higher? And on top of this, right, and on top of big tech earnings and everything, we have an election coming up, guys, and we have stimulus, which at this point we're not going to get until maybe even 2021. And we also just have just a lot going on, right? A lot going on in CV. You know, the virus is flaring up. You know, Europe is locking down in some countries, so that's spooking everybody out here. Maybe we see another lockdown in the U.S. So there's a lot going on here. And again, on top of that, throw in all of these companies reporting earnings. So what are your thoughts? Let me know down below. I would love to know what you guys have to think. And in terms of my trading, yet again, guys, I didn't do anything. I was close to pulling the trigger on AMD, which we'll go into a little bit later on in this video, but I didn't. And the truth is, guys, I've been waiting for big tech earnings. I have a pretty big position right now in Apple at $115. And I was telling you guys, hey, I'm going to wait and see what Apple reports. And then afterwards, I'm likely to add some money at it. And my target was $110 on Apple. It actually hit that after hours. It's still at that level now, and we'll get into that in a little bit. So with the way price action's looking, I might end up adding more tomorrow. That's if 108, 109, 110 ends up holding. So at this point, I have a lot of cash, right? I'm pretty cash heavy, I guess you would say, in my swing account. I'm about 40, 50% cash, and I've been very picky with my dollar allocation at this point. Because the election's coming up, I kind of want to wait till that blows over as well. But if we get low enough on Apple, I'm just going to add more to it, quite honestly, and I'm saving my cash exactly for that reason. So I'm in Apple at 115, looking to add more anywhere from 110 to 105 and even $100 flat. I would love to load the boat down there at $100, and I'm still in EA. And by the way, more to come on Apple in a little bit, guys. And I'm still in EA, which is getting decimated right now. I'm in at about $130-ish, 133 actually to be exact. And Workhorse as well. I'm also in that. WKHS, which did well today, up 3%. At one point, it was up even more, but still, you guys can see Workhorse. If we do a quick technical breakdown on this, you guys can clearly see we're struggling at this big resistance at about 1770. And I called this out. I talked about it in the Discord chat earlier as we saw that rally, right? I was looking to see if we were to fully break out of 1717 and break that 50 SMA on the hourly chart, but we obviously didn't. We got rejected. We took 17. We failed at 1770, and now we're trading down even after hours back under 17. So the downtrend here in Workhorse is looking like it's continuing. And like I said with Workhorse a couple days ago, I'm going to say it again. I'm looking to add more to this, preferably after they report earnings, which is around the beginning of November. So these three swings are longer-term swings, guys. So I'm okay being down here in the short term. All three of these, EA, Apple, and Workhorse. And with my other capital, I'm looking to get in some other stocks here that we're going to talk about in this video. So let me know down below in the comments, what are you guys doing? What are your thoughts? For me, again, it's been pretty boring. I haven't been doing much. That's just the honest truth, right? So let's get into the juicy big tech earnings now, guys. I have to take my hoodie off for this one. Let's go. Apple, AAPL. Unbelievable here, guys, what ended up happening. I mean, you already saw it. It's down under $110. It closed at $115. That means it's down about almost $6 a share now after hours, which equates to about a 4-ish% drop. And quite honestly, compared to some of these other big tech companies we're going to talk about in a couple minutes here, they didn't beat by as wide of a margin, in terms of EPS and revenue. I mean, EPS came in, and that's why, the earnings are a bit underwhelming. Maybe that's why the stock's going down a bit. EPS came in at 73 cents versus 70 cents estimated. So a beat on EPS, but not that big of a beat. And revenue came in at $64.7 billion versus $63.7 billion. Again, it's a beat, but not that big of a beat. And I'm sure you guys all know this for the most part, but Apple has a huge international footprint, right? They get a lot of sales over in Europe and China, Japan, and Asia, all over the world, right? So get this, America's sales were $30.69 billion this quarter versus $29.32 billion from which was the quarter last year. So year over year, they're doing a tad bit better in the Americas, right? And that's it's not that big of a difference because of the crisis we're in, obviously, right? And Europe revenue is actually looking pretty good. It came in at $16.9 billion versus this past quarter versus last year, same quarter last year, it was around $14.94 billion. So Europe is growing pretty nicely there year over year. And Greater China, guys, is very bad, the difference here. Their revenue came in at $7.94 billion versus $11.13 billion last year. So more like over $3 billion difference from this quarter to last quarter. So Greater China with Apple, it's struggling a bit there. And Japan came in revenue at $5.02 billion versus $4.98 billion last year. So every region, for the most part, at least the ones that I have here, other than China, their sales are better from last year overall. And international sales in general accounted for 59%. Let me say that again, 59% of revenue for Apple this past quarter, which is also pretty crazy, right? And when we break down the different segments of their business, we're going to start off with iPhone. iPhone revenue came in at $26.44 billion for this past quarter versus $33.36 billion last year, guys. So over a $7 billion difference there year over year. And mind you, guys, this upcoming quarter is going to be huge. Let's be honest, with iPhone 12, the 5G phone coming out, and all of those different variations. A lot of people are hyped up about that. I think the numbers are going to be much better this upcoming quarter. Obviously, we have to wait and see another 2.5 months, but they are, in my personal opinion. I'm sure a lot of you all will agree. We had iPad sales at $6.79 billion this past quarter versus $4.65 billion last year. So that's nice growth there in iPad. And Mac sales came in at a little bit over $9 billion versus almost $7 billion last year, same quarter. So other than iPhone, I mean, a lot of the different segments are growing nicely. We have Mac, we have iPad. If I dig here into the live news, maybe we can see, okay, wearables came in at $7.87 billion this quarter versus $6.52 billion last year. Services came in at $14.54 billion versus $12.51 billion last year. So, yeah, the iPhone sales aren't doing too great year over year, but every other segment is growing quite nicely, which quite honestly, guys, as an Apple long-term investor, forget about my swing trade. As a long-term investor, I like that, right? Because Apple, we all know Apple or the iPhone is the core of the business, right? It's the core of the business, and most of the sales come from iPhone. So I like to see them diversifying sales elsewhere, right? Getting more money from iPad, wearables, services, and so forth. So I'm happy that those segments are growing. And yeah, I'd be happier if iPhone was growing too, but hey, I'll take it. In this current crisis that we're in, those sales numbers are pretty solid. So Apple, that's what I'm looking at there. And again, the stock is down $6. So watch for 110. This could be a recovery spot on Apple, about 110. I mean, this has been a support from the beginning of August to the beginning of September to the beginning of, October a little bit there. We saw support around 110. So I think if 110 breaks, if we get a clear-cut break under that, that is where we're going to go down to that other level I mentioned earlier where I'd like to buy more Apple right around $105, right? If $105 hits, I'm probably going to be buying. I will be buying with both hands. Let's just put it that way. So Apple, that's kind of the rundown here. Very brief rundown on earnings, kind of the different numbers they're reporting. Amazon ended up reporting as well, and they actually did very well in terms of beating here. EPS came in at $12.37 versus $7.41 estimated. Revenue came in at $96.1 billion versus $92.7 billion estimated. So a double beat there in terms of Amazon, and they see their quarter four sales between $112 billion and $121 billion versus the $112.3 billion estimated by the analysts. So I guess that little spike up there in the guidance, $121 billion versus $112 billion estimated, I guess that is a good sign here for Amazon. And mind you, holiday sales are coming up. Although we are in crisis, there is a lot of economic harm right now. I still see their sales doing well in the holiday season. That's just my opinion. Yeah, I know a lot of people are struggling out there, but honestly, I feel like people are going to find a way to somehow, continue buying on Amazon. It's just the truth. I don't see them posting a lackluster quarter. Maybe not as good as other quarters in the past holiday season. I mean, it's all relative, but I don't know. We'll see. I don't see them doing poorly. Let's just put it that way throughout the holiday season. And the stock here after hours is going crazy. I mean, it went up to 3,300, back down to 3,140. Well, right around 3,150 now, and this is actually a level I mentioned yesterday and a couple of videos ago, 3,150 on Amazon. This is a big level of support. We've held it all of October, so if we hold here, although we are seeing a head and shoulder here on the hourly on Amazon, right around here, you guys can see it. So I mean, that's a bit worrisome, especially if 3150 breaks. But if 3150 holds and we get a little rally off of that, maybe we do go back up 3200, mid 3200s as some sort of relief rally. So I'm watching Amazon there in anticipation of these holiday sales coming up the next couple of months here. And Facebook, guys, they did pretty well as well. EPS came in at $2.71 versus $1.91 estimated, and revenue came in at $21.47 billion versus $19.82 billion estimated. So a double beat there on Facebook. It ended up going up almost to $300 per share after hours. Sold off aggressively to about $270, $275, which happens to be where we held as support earlier today. And notice here, guys, we're kind of getting a bit of an accelerating ascending pattern rather, here after hours. We bottomed at 270, 272, popped back up to 290, sold back off now to about 275, and we're holding the higher low and looking to rally out of 280 resistance right now after hours. So this could be a spot where Facebook ends up moving, maybe even tomorrow during the session, right? So I'm watching 280 on Facebook, up to maybe $300. That could be a nice move there, and I think their earnings were very good. On that brief glance, they crushed EPS, did very well revenue, and the third quarter daily active users, guys, which is a big number that a lot of these social media companies look at, like Facebook, Snapchat, Pinterest, a lot of these companies, right? Facebook quarter 3 daily active users were 1.82 billion, up about 12% year over year, which, hey, I know it's not 30% growth, 40% growth, but Facebook is no longer in that stage of business. It's slowly maturing a bit. It's not near death, right? It's not a business that's about to die, but it's not growing at 30%. So, in terms of daily active users, so 12%, I guess that's pretty solid year over year. And watch out for 280 to hold there, maybe a move from 280 to 300. And we also had Google, guys. Google ended up doing EPS of $16.40 versus $11.21 estimated. Revenue came in at $46.17 billion versus $42.9 billion, guys. And out of all big tech, this one's doing the best right now after hours. It went up from 1570 up to 1720, guys. Sold off to about 1600 flat, and now it's running back up to almost 1700. And Google, I'm very excited about this. I've been buying this stock, and quite honestly, I own all 4 of these stocks, but Google especially, I've been recently buying in my M1 account, which is a series I run for the channel, which I show you guys how to build a portfolio. Go check out the playlist. But I've been buying Google here since about 1400, so I'm very happy to see them up a big amount, a big chunk here after hours. So yeah, I'm excited about that. And in terms of the technicals on Google, we clearly held 1575. We completely broke out of that. And I mean, at this point, we're trading near all-time highs. So, I mean, Google might be gunning for all-time highs tomorrow. So take a look at a move up to maybe 1730. That's pretty much what I'm looking at. It could be in the cards, but if we pull down, maybe look at a 1640 to 1650 support. And if we find support at 1640, maybe then we rally back up to the 1700s. So that's big tech. We had Amazon, Apple, Facebook, and Google, and we have some other companies too that reported today. We had Shopify, SHOP, which ended up doing EPS of $1.13 versus 51 cents estimated, so a nice beat on EPS there. And revenue came in at $767.4 million versus $653.22 million estimated. So a double beat there on Shopify. But Shopify, guys, ended up going down. It ended up going down to about 977 here. It closed at 977, down almost 5% on the day. And what I personally see here, guys, is a dip buy. Quite honestly, guys, I see this as a dip buy, especially if we're able to recover to about 985, 990. I mean, this is an old resistance, or old support rather, new resistance now, from back in August, middle August, end of August, right? So I think if 980 is able to hold 980, 85, 990, I think we can squeeze back up to the mid thousands, maybe 1100, especially if the market itself doesn't drop, like I said earlier, where I said the bears are in charge still, right? If the market, let's say, rallies, we're going to see a pop in Shopify. That's my personal opinion. And overall, the trend here is an ascending triangle. I mean, that's pretty bullish. Overall, big resistance at 1050 to about 1100. We're still making higher lows into that resistance, so we're getting close to a squeeze, a big pop. It's coming, right? That's kind of what I'm personally thinking here. So Shopify, I'm watching that. Penn National Gaming as well. They ended up doing EPS of 93 cents versus 49 cents estimated. Revenue came in at $1.13 billion versus $1.08 billion estimated. And Penn, guys, it ended up breaking a pretty big support. This channel here, you guys can see, we ended up breaking it. And let me redraw this, honestly. Let me see if I can redraw this for you guys. But overall, I'm looking to see if Penn is able to somehow recover at this point. I mean, let's see here. Let's see where we could end up going to. I guess you can say, okay, it's still in this channel. That's why I wanted to redraw it for you guys. So we're still in this channel right now, the one that I just redrew. So watch and see if Penn's able to hold maybe $56, maybe $55. If we're slowly able to start to retake that level of support, big resistance coming up at 58 as well. If we're able to take out $56, $58, I can see a rally here on Penn National Gaming, maybe back up to $60, maybe back up to $65. That is very, very possible based on these technicals. And we also had Spotify today report. They had EPS of negative 68 cents versus negative 61, so they missed EPS. Revenue came in at $2.1 billion versus $2.36 billion, so a double miss on Spotify there. Stock ended up going down 3%. And overall, you guys can see we are kind of looking like, is this a ascending triangle as well? It kind of does look like it now that I'm looking at it. You guys can see here, I mean, take a look. If we're able to hold 250, 255, and we end up going back up into, I mean, we're already at the mid 260s. Let's say we break 270. I can see a pop up on Spotify, maybe back up to 290, and 290 is a big wall right now. That could be a breakout, the breakout we need back up to 300 or above 300. So watch out here for Spotify. Although they did report bad earnings, the trend is still looking pretty decent here. And Twitter, guys, they're getting decimated after hours, guys. Oh, man. Twitter, EPS, 4 cents versus 6 cents. They missed there. And revenue came in at $936 million versus $777.15 million estimated. So they missed EPS. They beat on revenue, and the stock's down over $10 per share from the high literally yesterday. Or was that today? Today, yeah, that was today. They hit $54 after market hours, then they dropped to $43. So that's a drop of almost 20%. Oh my goodness. I don't even know why Twitter is down so much. It's got to be some guidance issue. Oh, wow. That's what it is. Going back to what I said about Facebook, this goes to show, guys, look at this line. The company, where my mouse is, the company reported the smallest daily active user growth since 2017. That's got to be it. As these companies report daily active user growth that's declining or it's not as good, that's not good, because that's literally how many people are using the platform on a day-to-day. You want that to be growing and beating expectations, not falling behind. So with Facebook, we saw a 12% growth year over year. That's solid. And now with Twitter, we're not seeing as great of a number here. I'd love to know what it actually was. Daily active users, 187 million versus 145 million year over year, right? So it still grew about 42 million year over year, but I guess that wasn't what investors were expecting. So, hey, guys, that is a bunch of earnings reports here. Twitter, Spotify, Penn, Shop, Google, Facebook, Amazon, and Apple, guys. And a couple of other ones that I'm watching here in terms of stocks. Plug, Plug. Plug is down a good chunk. Plug Power here, a good chunk from its high at about almost $20, right? We're holding the uptrend, it looks like, here on the 4-hour chart. So very simple. I mean, if we hold 180 SMA 4-hour and this overall uptrend, and we start to get some price action that's breaking us out of this moving average here on the hourly chart, the 180 SMA. If we do that, hey, Plug Power can be in play. And if you guys didn't know, and I personally have to do a lot more research, quite honestly, into this company, Plug Power provides hydrogen fuel cell turnkey solutions for the electric mobility and stationary power markets in North America and Europe. It focuses on proton exchange membrane, which is PEM, that's what that stands for, fuel cell and fuel processing technologies, fuel cell battery hybrid technologies, and related hydrogen storage and dispensing infrastructure. So we're down about $5 per share from that high. That equates to about, let's take a look here exactly, about 21% of a drop. So watch for that technical break on the hourly chart and the 4-hour. That could end up being where we break out. And AMD is another one here. It looks like that reverse head and shoulder might be slowly panning out here. That's if 77, 78 holds and we end up breaking out, which we haven't done so quite yet, so we have to be patient, but I'm hopeful, guys. And again, I almost took a position here today, but I didn't. I held out, and I'm waiting to see a move probably above 80 to be safe, and anything above 80, I'll probably pull the trigger there. And NEO, guys, you got to love it. NEO ended up going up 16% today. We ended up calling out this move a couple days ago on Twitter as it broke out of this downwards channel. We also called it out in the Discord chat and maybe even on Instagram. So we called it out, guys. Instagram, at StasSurfS. Follow me at Twitter, or on Twitter, at StasSurfS as well. And make sure to join that Discord chat. I mean, this is unbelievable, right? Up 16% today. And they hit a key production milestone, key production number, and the company's rolling, guys. The company's rolling. EV market in China is expanding. So for me at this point, am I rushing into this? No, I'd probably wait and see the next pull down we have. Like I've said before, every time we see a leg up, we see a week, 2 weeks, 3 weeks. It really depends, but we see a bit of consolidation afterwards, a bit of selling. So I think if we see a bit of selling here, maybe back down to about $28, $30, that could be the next entry point, but I wouldn't FOMO into it necessarily yet right now. And last one, guys, Netflix. They ended up increasing the pricing in the U.S. markets here for their paid subscription, right? Ended up increasing the pricing, and the stock went up on that news. It was up a good chunk from $4.80 up to about $5.13, and obviously as they increase pricing, they're going to bring in more money. That's good news for the investors out there. And at this point, there's some momentum. So I'm thinking if 510 breaks, which we're struggling at now after hours, which is a bit worrisome, which is why I'm waiting until 510 breaks, I think if that does break, there's upside. Maybe from 510 to 530, 540. That's kind of what I'm looking at. So overall, guys, that is it for this video. If you all enjoyed it, feel free to hit that like button. Make sure to subscribe to the channel. And I'm going to leave you with one more thing. The big tech stocks control the market, right? So if we see that drop in the big tech names tomorrow, Apple, Amazon, Facebook, Google, even Microsoft, that means we might see even more selling. So keep that in mind. These companies are massive. They're in the trillions of dollars combined. So again, hit the like button if you guys enjoyed it. Make sure to subscribe to the channel and get your 3 free stocks from WeBull. Those are valued up to $1,600. That ends on the 30th of October. So make sure to deposit $100 using that link and get your free stocks. And oh, by the way, I'll leave a card up here if you guys are interested in seeing how to approach the market in a lazy way and get to $1 million in the market. It takes a long time. It takes years, but if you're diligent and you have a lazy quote-unquote approach, more passive approach, you can get to $1 million status in the market. I'll card that up here and I'll link it down below in the description, so I'll catch you guys there. Again, don't forget your 3 free stocks, and thanks for watching. Peace out.